What's going on, everybody? Welcome back to another episode of That Makes Zero Sense, the podcast. I'm your host, Alex Savanovich, and today, no different from our other episodes, all week we've been receiving many questions, many questions, and I'm not surprised by that given how crazy this market has been. So, without further ado, I selected the five top questions. I'm going to answer them today. Let's get right into it. So, question number one says, what do you make of the Mythos release from Anthropic? If that's not a software killer, I don't know what is. So, I think it's no shock to anybody that obviously the IGV and a bunch of software stocks have experienced some extreme selling this week as a result of this Anthropic release. It wasn't really a release because they didn't really let the public partake in its use yet. They're only opening it up to some of the largest enterprises to sort of test the software. There were a couple concerns. Things that I read were like the LLM or the bot actually is being deceptive a little bit with its researchers. So the researchers will give it prompts and then parameters that it has to act within. It's sort of like a sandbox, I guess, environment you could call it. And the bot is operating outside the sandbox and then coming back into the sandbox with answers that it found in ways that the researchers don't really allow. And it's being deceptive. It's finding ways to bypass protocol, bypass different guardrails. So, and it's also really good at finding different holes in various different cybersecurity measures, taking advantage of bugs in some banks and hospitals and various other sensitive areas. So it sounds a little bit like Ultron from Marvel. That's what I would sort of comp it to when I read all of these articles. I read a bunch yesterday. There was a Mizuho piece out yesterday that sort of compiled all the articles that were released yesterday about it. So I went through them, skimmed a couple of them because they were a bit longer. But yeah, it sounds to me like Anthropic released its own version of Terminator or yeah, Ultron, if you're familiar with the Marvel universe. Would this be a software killer? It definitely raises some eyebrows for me. I think the old SaaS apocalypse concerns that were, about a month ago when Anthropic released um, agents and the dispatch and Opus 4.6, I didn't really think that sell off was warranted. But now that I'm reading a lot of what this new model Mythos has to offer, again, I haven't used it because I'm not a large enterprise. I don't have access to it yet. I haven't seen it with my own eyes. And it's difficult to trust the media's account of this because I don't think any of them have access to the model. But it's interesting for sure. I think if everything I read on all those news reports, if even 70% of it's true, so, 50 to 70% of it's true, I think that's a big change. That's a big jump in the capability of these models. And it might be a little scary for software. I still don't believe that a lot of these legacy software names are going to be completely displaced. I think, if anything, the argument that I like the most and makes the most sense to me is a lot of these software names have moats. I don't think it's going to change anything for them really, except for make their products even stickier, make their products even better. Because remember, these companies pay developers and software engineers a lot of money to develop really sticky products. A lot of them, these enterprise SaaS names, have multi year deals with companies to provide software solutions, and having access to Anthropic and Claude and potentially this Mythos model only makes their capability to offer an even better product that much easier. And as somebody who's messed around with Opus 4.6 as much as I have and created little apps on it, and I have zero experience in software engineering, the apps are still not great. Like, it allows me to do things in any coding language that I never was able to do before. So for someone like me who's not a software engineer, it's a really cool tool to have because I'm able to do so many more things that I was never able to do before. However, the apps still have bugs. They're not perfect. They don't run as smoothly as an app that you might have to purchase from a large software vendor. And I think that's sort of their edge. They're professionals in this, and they're able to use these tools to their advantage to make their products that much better. So this whole SaaS apocalypse thing, I would give it a little bit more weight, a little bit more credibility given what I've read about Mythos. But again, I wouldn't throw them all out just yet because we don't know to what degree these media outlets are telling the truth. number one. And number two, we haven't seen how well these large software companies are going to lever AI and these models to make their products even better and improve their product offering and value proposition for companies that are purchasing their suite of software products. But I could be wrong, and maybe it is the software killer. We will see, only time will tell. Let's move on to question number two. Tuesday night into Wednesday morning, the ceasefire for 2 weeks was announced. Do you have any thoughts here? I don't have any thoughts on the ceasefire. I mean, obviously, I think it's a good thing. It's a good thing for the market. I think there's a lot of overhangs and a lot of risk with the war going on and with oil where it is. I'm just going to comment on what I saw in the tape that I thought was interesting. So pre-open, obviously, this news was going around, and the market was up a bunch of points. I don't remember exactly how much we were up. I want to say like 3% on the Qs or something like that. And once the market opened, there was a steady fade. And we didn't really see a whole lot of buying first half of the day. Second half of the day, story changed a little bit. But we didn't close higher than where we opened. That's number one. Number two, oil found a steady bid all day. So when I read that, when I look at that, I'm thinking to myself that market participants are not really believing the narrative. And then you also add on top of that fact that throughout the day, Saudi Arabia was reporting that not Israel, Iran was still bombing different countries in the Gulf. Israel was still bombing Lebanon and the Hezbollah. So just because of this 2 week ceasefire, it really was just a headline, in my opinion. And that's why the market didn't really believe it to start from the get go. And really, with something like this, given how many false headlines we've seen in the last few weeks since the war started, I think really only time will tell. And you have to continue to be careful in this tape. And you can't really make a giant directional bet one way or the other, unless you have some insider information, which we have seen a couple cases of that in the last few weeks. There's been a couple large trades made eerily, oddly, right before big announcements. So keep an eye on that too. Definitely interesting. But yeah, I don't have a whole lot to say on the ceasefire. I just think it was interesting to see the price action following that announcement that would tell you we're not really believing this whole thing. Let's go on to question number three. What are your predictions for the midterms? Are there any trading implications for that at all, or not really? So funny, someone should ask, because I was talking to my mentor about this exactly, and I'm not going to throw any exact names, but I think there is some value to be had. So maybe some trading edge being long stocks that were your typical Democrat loved stocks and being short some of your typical Republican winners. So, just to throw out a couple sectors, I think crypto was a big winner. Anything crypto levered was a big winner coming into Trump's presidency. Then for the Democrats, anything that was battery tech, solar tech, anything really clean energy that was seeing a lot of tax incentives and tax credits and tax breaks. Those were really loved groups when the Democrats were in power. I think another group that was really loved was managed care. So your Humana, your Cigna, your United Health, those type of stocks really saw a lot of love in a Democratic-led government. And I think that the midterms, someone was saying to me that right now, if you bet on the Republicans winning the midterms, you get paid out 7-1. So they're a heavy underdog. And so my thinking with all of this is there's probably a pretty strong pair trade to be had if you just found the certain stocks, sectors, names that have performed well going into the Trump administration and a Republican led government. If you short those, and then belong some names that are loved by the Democrats and names that perform well typically under a blue administration. I'm not going to go through the exact names. Like I said, that's for you guys to research and do on your own time. But that theme I sort of like going into the midterm election. And my predictions for the midterms, like I said, Polymarket, Kalshi are pricing in that the Republicans are a huge underdog. Frankly, I would agree. I think Trump has lost a lot of credibility as a result of this war in Iran, not to mention various other things that ruined his credibility. But I think this is the big one. That's number one. Number two, I don't think Republicans have delivered on many of their promises that they made when they were elected into power. Remember, they won basically a clean sweep over the Democrats in every level of government, and they're sort of fumbling the bag here. Not a lot has been done on affordability. If anything, prices have gotten more expensive and will continue to get more expensive as a result of the war. Housing affordability hasn't really changed. Rates are still elevated. There's none of these rate cuts that Trump keeps on saying that he wants to have, which I know is not his decision to make. It's the Federal Reserve's decision to make. But I don't think the American population is very pleased with the Republican government right now, just based on these first 2 years. Let's move on to question number 4. Do you have any good analogies for trading that would help me illustrate the concepts and teachings to my 14-year-old son? I just need an easier way of explaining it. That's a good question. Um, I'm not going to say this is going to work for your kid, but when I was learning how to trade and learning about the markets, and I shouldn't really say learning about the markets because that's mostly economics and having a sound understanding of those sort of things, and that might be difficult for a 14-year-old to grasp. But when it comes to specifically trading and the principles of risk management and managing your emotions and playing at a level where you can compete with some of the biggest institutions in the world, the most powerful institutions around the globe. For me personally, because I grew up playing sports, I played hockey and basketball growing up. Sport analogies, funnily enough, have a lot of parallels to trading. I'm trying to think of an example right now. I mean, the time required that it takes to get good at this, the amount of focus, the preparation in the morning before you actually start trading. Um, the fact that really, if you want to have a good trading day, it starts from the night before, getting a good night's sleep to make sure that the next day you have a sound mind to make strong decisions. Risk management, knowing when to get out of a loser because the odds of it turning into a winner are really dwindling the more the position goes against you. There's so many things, so many lessons that are so important in trading, so many axioms I think that are important in trading that are also equally important in sports. So I would say if your kid plays a sport, there are probably so many great analogies. Pick the sport, whatever it is. I don't know. If your kid plays something, use that sport to illustrate sort of the more vague and obscure or even abstract topics in trading. I've said many times on this podcast before, if you want to learn just the mechanics of entering a buy, entering a short sell, entering a trail stop, that's very easy to do and very easy to teach if you just open a paper trading account to just understand the mechanics of how trading a stock in the market works and clicking buttons. That's a very easy thing to learn. But the actual difficult things to learn about learning about yourself, understanding where you slip up, what emotional risks you're susceptible to, a lot of that can also be found in sports, because sports, I would equate learning to enter orders on the system is sort of just learning any skill in sport. I can hit buy and hit sell all day long in a paper trade account and understand the mechanics of trading, just like I can shoot threes in the gym all day long where no one's around in practice, and maybe I go 50% from 3-point range, which is a pretty good percentage. But once the lights are on, once there's people in the crowd, once I'm playing another team and it's the intensity of a game, it really isn't about your skill level. Obviously the skill brings you so far, but then the mental game brings you even further. And I would say it's the exact same way in trading. You can do as many reps as you want, and it's important to do those reps because you need the skill there in order to perform at the highest level. But to then get you to that upper echelon of performance, you need to also have the mental game. And that is so important in trading as well. So, long story short, use sports as an analogy. I think that's really easy, and most kids would understand it when you frame it that way if you really want to talk to your kid about trading. So, let's move on to the final question. Question number 5. I am getting a big tax refund this year. I live in Canada and I have a TFSA. What stocks should I buy? I need some good winning picks. Exclamation point, exclamation point, exclamation point. Okay. Like I've said many times before on this podcast, I do not give investment advice on this podcast. The stuff I said earlier about the pair trade regarding the Democrat and Republican loved stocks, that's just an idea personally I thought of. I don't condone anyone doing that. The markets are risky, and putting on a pair trade is a risky strategy. I'm just spitballing some ideas that I've had and things that I've seen that worked in the past, but I do not condone you putting on that trade if you are not a professional and you don't understand what you're doing and you've not traded before, or even if you traded before. Again, do your own research, make your own decisions. I'm not giving anyone advice, nor am I going to give anyone stock picks like this question asked. I will, however, give, I think, what is sound advice for anybody, and it's not necessarily financial advice. If you're getting a big tax refund and you want to put it into your TFSA, I think that's a great idea. Tax-free savings account in Canada is a great thing, and I fully encourage everybody to utilize their TFSA if they're not already. I'm not going to tell you what stocks to pick, like I said, but I will say it's very difficult if you're not a professional and you're not doing this every single day to pick individual stocks. It's a very, very difficult game. And the vast majority of data says that most people lose money when they try and pick individual stocks. So I would say find an index ETF, find some sort of ETF product that tracks a large group of stocks. There's S&P 500 ETFs, there's NASDAQ 100 ETFs, there is Canadian dividend stock ETFs. There's so many ETFs out there. Now, I would just find one that's diversified. That's number one. And number two, I would find one that has a low expense ratio. With the emergence of so many ETFs, these companies who put together these products have to compete on price a little bit. And so a lot of these very complicated products, which were once upon a time priced at 2% or 1%, 1.5%, are now sometimes 30 basis points or 50 basis points, which is really, really cheap. So when you're looking for an ETF product, and I've talked about this on this show a long time ago, back when it was still called Trajecta University, we've since now changed the name. I would say if you're getting a tax refund, look for an ETF product that you like that puts you in some exposure to names that you like or a group or a theme that you like or just the general market, and find one that has a low expense ratio. I would say anything from 25 basis points up to 60 basis points is considered relatively cheap and sort of good. You do have to look at what the yield on the ETF is. You want something that is cheap. So when you look at the ETF's information and statistics, you want to find something called the MER, which is the manager's expense ratio. And that's basically the amount that you're charged, the amount of your assets, the percentage of your assets that you're charged for this manager to put this product together and manage it for you. So that would be my advice to someone who's getting a tax refund. If you really want me to give you stock picks, I'm not going to. If you want to have a one-on-one discussion about some names and sectors that I find interesting, I'm happy to do that, but I'm never going to give any sort of stock advice on this channel. I just think find a good ETF, find one that has a low expense ratio, and you're already doing so much better than so many other people who are invested in mutual fund products where they're charging you 1.5 to 2% to basically do the same thing that an ETF could do. Whew, that was a lot. That was a great episode, though. I think we answered these questions to the best of my ability. Guys, it's a crazy market. Take care of yourselves. Make sure you have your stops in. Don't do anything erratic. It's moments like these that really make or break an investor or trader. You don't want to be making huge swing for the fence bets. It's a precarious market right now. And so be careful, please. If you have any questions, drop them in the comment section on my Instagram, my YouTube, or the TikTok. I'm always watching those and I love interacting with all the people that engage with the content. We also post shorts on all of those platforms. So thank you again so much for listening. I hope you have a fantastic Friday and a great weekend. Take care, and I'll catch you on the next one. The content of this podcast is provided for informational and educational purposes only and should not be construed as financial, investment, legal, or tax advice. The views and opinions expressed by the host and any guests are solely their own and do not reflect the views of any employer, firm, or affiliated institution. Any examples or strategies discussed are general in nature and may not be appropriate for your personal circumstances. Always consult a licensed financial advisor or other qualified professional before making any financial decisions. The host and production team assume no liability for any loss or damage resulting from reliance on the information provided in this podcast.